Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
To what is arguably one of the most exciting, whether you take that as a good thing or a bad thing, days of the month so far here. NFP, today we are getting some jobs numbers out of the United States, and this will have huge impact on the financial markets, as if they needed any more huge impact. The last 24 hours has been crazy. Yesterday we had some crazy news out of Eastern Europe, as well as mic muted. Can you guys hear me? Let me know. Okay, you can hear me. Let me know if you cannot hear me. I will double check. I can hear now. Okay, good. Sorry about that, guys. So we have some huge news in regards to several things, and NFP is also one of them. So we have NFP, we have the Fed, and we have NATO. So multiple things here to go through, and I don't really even know where to start. So I'm just going to start out here with the kind of biggest one in the room, which is Ukraine potentially being invited here into NATO. And, why does this impact financial markets? Well, geopolitically, that's a huge escalation if there or potential escalation from Russia, as Russia might take that as some sort of attack on their country, and if that becomes their stance on it, things could escalate. We saw in 2022 that oil prices dramatically rose due to the war and supply constraints and things like that. So if you get a situation in which there's escalation on that front, you have to be really careful. That could be incredibly volatile for markets. Think about what this could mean in terms of the inflation story. If oil prices continue to launch higher on fear of war, if that happens, it's going to throw a wrench in the Fed's inflation plan, right? If they're thinking, hey, we're going to cut rates and it's, because inflation's on the right path. Well, if inflation completely gets ripped off that path by supply issues again, which we saw in 2022, which we saw in COVID-19, right? There's some serious risk there. That's just one piece. On top of that, we had a major Fed official yesterday mention that he does not think that 3 rate cuts are in the cards for this year. And he actually very much went kind of against what Jerome Powell was thinking. And that's another committee member. So that made the markets freak out. This made the markets freak out. And today, will NFP do the same? That's the question. The point is, you don't need me to tell you this stuff is moving the markets because you can see it everywhere. But the easiest way to spot it right off the bat is take a look at the VIX. The VIX is up to 16.44. We were just at 12.5, right? 12.5, jumping massively here off of everything that's happened in the last 24 hours. War concerns, Fed officials talking more hawkish suddenly. The market doesn't like that. Or does it? Because now the market is bouncing back here a little bit. Here's the SP500 on the day. We had this kind of picture perfect potential breakout forming yesterday. I don't know if you guys were watching the S&P or the NASDAQ, but check this out. We were making our push just up to this level here. And just before we made that breakout, boom, there just came a spike in the price of oil. I'll show you guys oil here now as well. So we had this huge huge intraday reversal on oil and just rocketed higher. I am still long oil and plan to stay long oil unless we break structure here. I've got this level marked out on my 4-hour chart. I've been long oil for some time, but yesterday's concerns geopolitically obviously really launched oil's price higher. And again, if that becomes a bigger story, there is no telling how far oil actually could run. Oil's been in an uptrend, but here's the thing. Is it due for a bit of a correction? Maybe, but does it have to? No. This thing could rip higher, right? You could see oil if concerns stay elevated between Russia, Ukraine, Middle Eastern tension. You've got Iran in the picture. You've got all of this geopolitics stuff that are also weighing in on this. And so today's job numbers, yes, they are important, but there are multiple forces really pushing the markets around right now. I'm still in my gold trade. Looks like I survived. Well, I shouldn't say it just yet because we're about to get NFP, which could completely change the story. But so far, I'm still in my trade. My stop loss has not been hit. I've been trailing these 2 trades that I've had on for over a month. Well, this second trade I've had for almost a month now too, 20 days. Crazy. So I've been in 2 different gold trades. I bought once down here. I bought a second time. I continue to stay long. My stop loss is below this market structure that we can see a little more clearly on the 4-hour chart. So 4-hour chart, I've got to stop below this level. If NFP comes out really, really strong, like you get just crazy strong jobs numbers, it's possible that gold could make a bit of a push lower, in which case I'll stop out, take my profits. If it comes out cooler, gold probably goes higher. Right? And we could flip that same script around for the dollar. If you get hot jobs numbers, the dollar may pop and hold this support level. But if jobs numbers come out cool, dollar's coming down, right? Most likely. And not only that, let's talk a little stock market stuff. I'll tell you this. If you get jobs numbers that are hotter than expected, meaning lots of job growth, what is your first reaction to what the stock market would do? Good jobs, market goes up. Maybe, but probably not. Why would it go down? Well, think about it fundamentally for a moment. If you get hot jobs numbers, let's talk fundamentals. Remember, this is the real stuff that moves the markets, not pretty pictures on charts. That's not what truly moves the markets. While I still draw pretty pictures, I also understand that that's not truly the force behind the market. If you get hot jobs numbers, here's what happens. The Fed probably looks at that and says, oh, okay, so jobs are healthy. We may not need to rate cut as soon. And the market says, oh no, we're not getting our candy rate cuts. And if we don't get candy rate cuts, market says, oh no, we got to sell off, right? That's probably what happens. Now, that being said, I actually don't necessarily agree with that. If you get strong jobs numbers and the market sells off, I actually think that's an opportunity, in my personal opinion, to build positions on the S&P 500 to buy stocks, because I don't necessarily think that the market needs a bunch of rate cuts in order to keep going up. I think that there's great companies, that there's a lot of still a strong growing economy can still lead to stock market growth as well. But again, I think people who are looking for that straight shot continuation, they want rate cuts bad. And so that's where we'll see where that happens, right? So I just want to also say, guys, as we get closer to NFP, a lot of people lose a lot of money trading these sorts of events. Please don't leverage your account massively going into an NFP event. It is a very, very dangerous thing. And if you've done that in the past and gotten away with it, let me just tell you that a lot of people do get away with high margin, high risk. But then eventually it will come back and bite you and take you all the way down. So please be very careful with that stuff. As we approach the NFP event, I just wanted to quickly update you guys on where the EDGEFINDER is in terms of setups. Let's make sure to refresh the data here. So this is our latest top setups page, continuing to be bullish oil. Probably one of the best callouts on the EDGEFINDER this year has continued to be oil. Dollar yen, also bullish there overall. So I kind of like that potentially with the pullback that's going on. We could flip this around. So dollar CAD also. Let's take a look at the other side of things. On the sell side, we have bearishness on the pound dollar, the pound Aussie, the Kiwi dollar, the Nikkei, the Euro, and the NASDAQ. This is a really rare thing. But again, we saw COT data selling the NASDAQ. I don't know if you guys saw this, but the commitment of traders data told us before this week that institutional money sold heavily on the NASDAQ. If you don't believe me, let me show you the commitment of traders data from this previous filing. Look at this. So NASDAQ was the second biggest sell on the EDGEFINDER's commitment of traders data tracker. This is crazy. So the NASDAQ saw heavy selling before this week. And not only that, you ready for it? Look, gold buys, right? Something to think about is when you see big money moving into these things, and then before the big moves that happen in the markets, it's really fascinating, right? So gold, they've been buying gold aggressively, and look at how it's been going, right? They've been making significant money, and I'm talking about, when I say they, what I'm talking about is large speculators that file with the CFTC on the commitment of traders data. We can track that data using the EDGEFINDER. By the way, EDGEFINDER is currently 45% off. I don't know if you've heard this already or not, but if you have not, we are currently doing 45% off. It's our biggest sale of the year. We're celebrating 2 years since we initially launched this product, and thousands of traders all over the world have copies, helping them to improve their trading, pass prop funding, get more data into their trading analysis, use fundamentals, make them more approachable. If you don't have a copy, today is your day. It's 45% off. It's the biggest discount of the entire year. What are you waiting for? If you'd like a copy, here it is. Yes, this is a sales pitch, but it's because it's a wonderful product and you should have a copy if you don't already. Click this link, send us a direct message, and we will lock you in right now with that 45% off discount before this ends. Again, 45% off is the biggest discount that we ever do. So if you get a copy today, you'll get a copy at a lower price than anybody else this year, which is awesome. Am I bearish gold? No, I am bullish gold, and that doesn't necessarily mean, though, I'm not buying gold ahead of NFP. That's just asking for trouble. I'm long gold as of a month ago. I've added another trade. I'm just riding this in trailing stops, as I have been on the channel for weeks now. Each one of these levels, by the way, these are trailing stop levels. So what I mean by that is I bought, and then market moved, and then I trailed, and then I trailed, and then trailed, and this is where my current stop loss sits. I'll show you the current position just so you know I'm not making stuff up. Here's GLD, the ETF that I bought to track the price of gold. I'm up $15,732 on that one. We'll take a quick look on USO. This is oil. This is my second biggest trade of the year right now. Oil's up $12,621. It's been a really good start to the year. We'll see if it can keep going. I've been long mostly commodities and watching indices to see if they pull back here. Let's go take a quick look, guys. We're getting close here. We're 1 minute out from the NFP number. I'll tell you right now, I'm looking for wage growth to come in slow. I'm looking for jobs to be hot. That would be a green light for stocks, and it would be interesting on that front. So what you've got here, whatever you're watching right now, guys, we're about the 40 seconds. If you're looking at the S&P and the NASDAQ, here it is on the left side of your screen. You got the Dow, you got the NASDAQ, you got the S&P. Here's the dollar, here's the euro, here's the pound, here's gold, here's oil. So whatever you watch, I've got it pulled up on the screen for you so that you don't miss this spike here. And stick around, because a lot of people will leave. Don't leave. The analysis comes after the spike. So coming in here, breaking news right now. All right, let's see what we get for NFP. About 10 seconds to go. All right, and jobs numbers are in. S&P 500 just sold off. Euro selling off. Dollar coming in hot. Look at this, guys. The dollar liked that. So I'm going to tell you right now, this is my guess with a move like this. Before looking at the numbers, employment change is up, unemployment rate staying steady, and wage growth. Let's see, wage growth is going to be as expected. Let's see if I got that right. Okay, wage growth as expected, unemployment rate more than held steady, and employment change was up. So we were 2 out of 3 correct. Unemployment rate out of Canada, by the way, jumping. Unemployment rate in the US coming down. So just a stubborn and strong economy here for the labor market. I'll tell you what, like I said, I actually like this for a stock market buy. If the market keeps dipping, this is great news. But the problem is, why is this causing the stock market to go down in the short term? Well, because the stock market wants rate cuts. And if the rate cuts are going to get pushed back because the labor market is inflationary, right? That is something to consider. Now, in terms of wage growth, you didn't get terrible news here, because if it was 0.4, that would freak out the markets. But 0.3 just came in as expected. But Again, still seeing wage growth not necessarily coming down here on the month. You're seeing jobs data come out strong, and in terms of revised numbers, barely any revisions here. So this is actually just a strong jobs data point here today. And again, what might be confusing to traders is that actually bullish for stocks? Is that bearish for stocks? Well, let's go through the charts here again. This is not great for gold because, again, strong jobs data is going to be inflationary. Inflationary is going to keep the Fed from cutting rates. Gold rallies on rate cuts, right? That is what's caused it to rally recently. That is what will get it to keep rallying, in my opinion. That or geopolitical tensions, which could also spike this back up by the end of the day. That's the wild card right now in the markets. The dollar index making moves higher just makes sense. This is just a strong jobs data point. Euro dollar, pound dollar, not loving this because, of course, the dollar, the U.S. economy looking more attractive relative to their own, UK, Europe. The Dow, the S&P 500 moving lower here on the day, but not really decisively. I think that there's just, the question is, does the Fed do anything with this? And yesterday, what really caused the S&P 500 to scream and howl was two things. I mentioned it earlier. The concerns about Ukraine and NATO and that sort of thing, certainly causing some stir. But on top of that, if you're asking, is this jobs data here bullish or bearish for stocks? Well, it's kind of a mixed bag. You could take it and say, well, the economy is strong and that's great, and companies can still grow, but what about rate cuts? Rate cuts could get pushed back. I bet you right now the market is already saying, well, that was just a strong jobs data point. It's probably going to push back on the idea of rate cuts in the short term. Let me see if I can validate that theory, yes or no, with the yields. Yes, we have validated, simply put. Let me show you what I just pulled up. This is the 2-year government yield. And what we see here, guys, is a spike in the 2-year up to 4.7%. This will tell you, this singular chart will usually tell you what the bond market thinks is going to happen to interest rates. So what we're seeing here is a spike in the yield here because investors, bond traders, they're saying, oh, yeah, so that jobs number, that's going to be that's going to work against the idea of rate cuts. So we might be higher for longer. Now, by the way, cool little technical pattern here. You can keep this really simple for our technical friends out there. Check this out. So if you're looking at the 2-year government bond, check this out. So we've got this little wedge formation. The market, I will tell you right now, the market will hate this if that thing rips through that high. If this happens, probably what happens, not great for gold, not great for stocks, because what suddenly becomes apparent is, oh, yeah, we might have a little bit more struggle than we're thinking in terms of getting inflation under control and getting rates to come down. Now, that being said, again, let me reiterate that I am not bearish on stocks in that regard. Now, short term, you might see a dip, but I'm saying I think actually that's not. I'm a fan of thinking we don't need a ton of rate cuts. I think the stock market with a strong economy can grow earnings. Now, will they need to come down from where they're at? Yeah, I think so. But anyways, long story short, it is causing some stir in the stock market here this morning, but not a decisive one, it seems like. Take a look at gold here. Gold shot lower initially and is now seemingly bouncing a little bit. You've got oil here making not too much of a ripple effect there. Again, the big mover today is the yields market, which is jumping on this news. At the same time, we have let's take a look at the dollar index. There's the dollar index. Dollar index is jumping on this news. Again, support seems to have held from where we drew it yesterday. This kind of upward trend that we saw, support rounded out and bottomed out. Guys, I also want to add something. I mentioned earlier the commitment of traders data. We get the latest filing later on today, I believe. Actually, there was a bank holiday somewhere in there, so we might get it today. We might get it Monday. I'm not exactly sure. I'll have to check on that. In fact, if you have an EDGEFINDER copy, click this link. It will usually tell you the scheduling so that you can check the CFTC's website. Also, so this data comes out once a week. We get an idea of what institutional money has been buying, has been selling. We'll get that data here today, I think. Maybe on Monday. I'm not sure. Regardless, I'm very curious to see, with such a crazy week, did they go buy oil? Did they go buy gold? Did they sell stocks ahead of this week? That's going to be curious. And going into next week, is that going to be a mover? So again, we'll keep an eye on COT data. Also, quick look at retail positioning here. We'll get the latest data that we can here. So we have, in terms of institutional positioning, we just looked at that. Let's look at the crowd. The crowd is shorting the S&P, shorting the UK 100 and the dollar yen. On the flip side, this is very interesting. Contrarian signal on the NASDAQ. The retail crowd seems to be very much going long the NASDAQ 100, right? So that's, of course, your big tech stocks. So that gives me a little bit concerned. In fact, it makes me think maybe the tech side of things has a little bit more downside. Same thing with the Russell. While we're talking stocks, we have silver, copper, platinum, iron ore, the Australian dollar. These are giving you some of your more contrarian signals to be more bearish, simply because retail is very, very not bearish. In fact, they're very bullish. That being said, I just want to reiterate that just because something in retail positioning, this is just one column of the EDGEFINDER's output scoring system. Okay, the reason I mention that is many traders will look at something like this. They'll say, oh, wow, I should just use that indicator. It's going to do everything for me. I wish the markets were that easy, but what we've done, what our goal here with the software is to not just isolate one singular indicator, but rather combine many powerful real market forces like inflation figures or today's employment change and unemployment rate, which that data will populate in the EDGEFINDER shortly, right? We look at this data and it factors in to the bullish and bearish readings that we're getting. So I'll tell you, today's job numbers is going to continue to be bullish for oil. It's going to look good for the dollar, right? It's going to factor into some of the scoring outputs of the EDGEFINDER, and you'll see that shortly populating in the top setups algorithm page. This is where I go each day to find the setups that I trade. Remember, guys, this is currently 45% off. If you are a regular stream viewer and you've been thinking about getting a copy, do not miss the 45% off sale that's going on right now. We'll drop the link here in the chat for you. If you click this link, it will take you to a support chat center where you can speak with someone on my team who's trained with the software, who can give you information about it if you have questions, and can give you some information about the discount so that you can lock in the lowest price of the entire year. Why are we doing such a big sale? It's because it's our 2-year celebration since we launched this product, and it has come tremendously far since we first launched it. So it's been really cool to watch it grow over time. And with all the talented people involved in building it, it's just been a cool process. Anyways, quick reminder, if you're just tuning in, so jobs data came in mostly really hot. So employment change was really strong. You had 303,000 jobs created compared to 212. That's a big jump. Unemployment rate was expected to stay steady at 3.9. It actually came down. Less unemployment rate. That's very strong for the dollar. That's very good for the labor market strength. Now, 2 out of 3, wage growth, average hourly earnings came in right as expected, but they also revised the previous one higher. So this is just another example of a smash hit in terms of a jobs report data. This is strong jobs out of the US. Now, where does that take us? Again, that takes us back to where we've been in part of the pullback period in 2023, where you're starting to see strong economic data. You're starting to see the labor market is stubborn. And that is a good thing. Obviously, if you're somebody who got a raise, if you're somebody who is now employed, that's great. And you know, that's awesome news for that individual. But for the stock market and for inflation story, it's not so hot. It's not so great, because remember, if everybody's getting jobs, everybody's getting raises and wage increases, what happens is then all those people take it into the market and they start spending more money. And that has been what's been driving prices up when you go to the grocery store, well, truly the real reason is because the Fed's printed $1 bajillion. But it trickles into our pricing when everybody's getting jobs, wage growth, and going out and spending it. So what's interesting here for us is this is going to be a stubborn thorn in the side of the Fed. And you know what also makes me really bearish? Well, not bearish, but it really increases, it stokes the flames of bearishness on why I think the S&P 500 has room to the downside in the short term. Do you know why? It's the same reason why I'm long oil. If oil keeps going, this is also inflationary. So jobs are inflationary today, but so is oil. Because if oil prices continue to spike, if you get conflict in the Middle East, in the Ukraine front, these things are inflationary. And inflation is absolutely not what the Fed wants to see resurface when they're trying to get to a point where they can cut rates. So they've talked about, we heard Jerome Powell recently saying, we expect to still be on pace to cut rates. Well, as much as he may and genuinely have meant that, if we keep seeing data like this and inflation tick up, the likelihood that the Fed actually cuts rates significantly decreases this year. And again, don't take my word for it. Remember what I said earlier. It's all in the yields market. You can see it here. Yields are on the rise. What that means is that the bid for government bonds, they're saying we need higher yield because we think, and this is I'm saying we as if I'm the bond market. We think that inflation's going to be sticky. We think that the U.S. economy is going to continue to be strong, and so if we're going to collect, interest on a bond, we want to get paid more for that bond simply because inflation is going to erode away some of the gains on our bonds, right? So that's why the bond market is saying yields going up, right? So that is, again, a huge important thing to consider. If you are a currency trader or a gold trader or a stock trader, one of the most important markets in the whole world is the bond market. It's boring as anything, but it's the most important, I think. Because again, if you're somebody who conventional Western economics, it's all about what the central banks are doing. And if the central banks are, going to get forced into a corner with this inflation story again, that's where things get a little scary. That being said, stock market is bouncing here on the day, despite the news. NASDAQ, but you have to also take into consideration, look at that move that we saw yesterday. Possible that the market just wanted to find a reason to bounce in the short term. And as I mentioned, I am not a stock market bear. I actually am quite bullish on the stock market and would love to see this thing continue to pull back because I'll probably buy it. In fact, I have sold puts yesterday that are looking great here this morning. I sold puts on the S&P 500 and I sold puts on the XLK ETF. This is the technology ETF. What I'm saying when I say I sold puts, for those of you guys who are not options traders, I basically sold puts. So if you buy a put, you're bearish. If you sell a put, you're bullish. So I sold puts on XLK just at the close yesterday. Ended up being a pretty good timing, and we'll see if it continues. It's sort of a short term. I think it's like a 15-day out put that I've sold. If the market rolls over, I would love to get assigned. So I actually threw those out there with the hopes that the market would continue to pull back so I can get assigned on those. But if it doesn't, I'll collect premium and it'll be fine either way. So is what it is. Gold here, take a quick look at the 1 hour chart, completely evaporating any sort of downside. And you have to, in my opinion, consider the fact that maybe this market on gold doesn't want to come down because, yes, jobs numbers look terrible for gold. But what else is at play? Well, think about it this way. Geopolitically, where do people want to be? If there's concerns in the world about escalation in the Middle East or in Ukraine, people want to stay in gold. And that story, I threw something out on Twitter yesterday. I started wondering, gold price has gone exploding higher in the last month. I've attributed most of it to the idea of rate cuts are coming. But in the recent move, it doesn't seem like that's the only thing propping gold up. It may also just simply be some concern about geopolitically what's going on in the world. Again, we saw the same concern in this spike in the VIX. So as I look at price of gold, I think you got two sides of the story. Yes, it's the interest rate story, but yes, it is also the geopolitical risks. Okay. So that's where I'm looking at. Or that's what I'm looking at when it comes to gold. In terms of how I'm managing my trade, I mentioned this earlier. If price breaks the lows here, I will be out of the trade. I'll take profits on that move that I've been in since February 20 something. I'll show you. I first entered the trade over 2030 something an ounce is where I first got in. And again, this is the current update on the gold trade. I have two active momentum trades right now, both gold and oil, which are pretty heavily concentrated in my account and has ended up being a really good play here. At the turn of the year, I was very bullish commodities. I was early to that theory, but It ended up working out. I've traded in and out of commodities several times this year, and so far seems to be working quite well. You might ask, well, Nick, why don't you have any longs on the S&P and the NASDAQ? Well, I'll tell you right now, I missed some of this latest move. So while I've missed that move there, I caught a lot of the reversal here, right? In November, as the Fed really pivoted dovish. I was super long on stocks, which was awesome. But then I missed out on this subsequent rally. That being said, I pivoted into commodities, and that seems to have not been the right call initially, but recently has been really working out, which is great. So yeah, we'll keep going here. Silver pulling back slightly. Gold again, not moving too much off of its highs, which is impressive considering we just had a hot jobs number. Gold just seems to be so resilient right now, and I can imagine. I know that somebody out there is very, very bearish on gold, and I just want to say I feel your frustration. Although I am long, I recognize sometimes when a market is just invincible to one direction, it can be incredibly frustrating to watch it. And I know that from firsthand because I've mentioned I've been waiting so patiently for pullbacks on the stock market, and it just seems to be invincible until suddenly it's not, guys. Until suddenly something comes out of left field like we saw yesterday, and it really spooks the market. So with gold, the story will be the same. While I am long, while I continue to want it to go, it will correct. But I'm not encouraging you to just outright short gold just because it seems high. If you think gold is too high, I can tell you, I do this every day, right? I'm a content creator in the trading space. I get comments constantly, sell gold, sell gold, sell gold, sell gold. Do not be one of them who just says sell gold, but you don't know the fundamentals. If you don't know the fundamentals of why gold is moving, stop trading gold because again, it's the driving force of gold right now. If you think gold is just doing this just because it created a pretty bounce off support, that's not the reason. And if you're just running blind, if you're just shorting gold and it just keeps going up and up and up, again, what are you doing? Because right now, fundamentally, you would not catch me shorting gold. The Fed is talking about rate cuts on one hand. Now that got backed up a little bit here in the last few days, but that's been the prevailing story. And on top of that, we have potential breakouts in parts of the world in terms of violence and war. And again, during those times, gold is a safe haven. So my point is, if you are somebody who is just shorting this massive rally, you have to be so careful. So that's just my thought on gold. And I know somebody out there, I'm not trying to offend you or hurt your feelings. I know it feels terrible to be on the wrong side of a move like this, and I've been there myself. But if you correct and you start using fundamentals, I'm telling you, it is a game changer. You won't find yourself just fighting a massive fundamental story and wondering, why is my account getting destroyed by a move up in gold, right? Something to consider. Anyways, again, continue to be long oil, as I mentioned earlier. Quick look at some of the currency pairs. Let's look at some of the majors just for a moment on the EDGEFINDER's output page. Going major currency pairs here, guys. We've got pound USD, euro dollar, Kiwi dollar, USD CAD, USD yen, all of them favoring the dollar right now. The only ones we're getting neutral readings are Aussie dollar and dollar Swiss. Let's go take a look at some of those currency crosses just to see what's going on with the euro here this morning. Euro USD selling off. I'm feeling a little bummed out about this one, guys, because if you have been watching the show, I sold the euro. Look at this. And again, I'm telling you this about my really good gold trade, my really good oil trade. Let me also be transparent. I sold euro at literally like the worst time. I sold the euro like right around here. We saw an initial sell-off, right? And then it just exploded higher. So I'm by no means trying to come across as I'm always right and that fundamentals just are perfect, because they absolutely are not, right? Fundamentals, just like technical analysis, can have some subjectivity to them. So that being said, euro dollar here, big spike up, but today's number, again, I think really reinstates that the dollar, in my opinion, is looking strong for the short term. We'll see if that keeps going. But again, yields are telling the story today, shooting up on this data. Okay, so euro, I don't have an opinion here on this because, again, my technical theory here, right, which was what got me into the trade, I thought, hey, it's pulling back to this previous level. This is a trade I've taken a million times, right? That same setup, but sometimes it doesn't work. That's the thing about markets. Nothing works all the time. So price pulls back. breaks there, I'd be very curious to see if this market keeps rolling over with the euro, which, by the way, look at that. I mean, it is really tumbling here. If it breaks this level of support, maybe you see the continuation of that bigger picture trend. Perhaps this was one big fake out in the euro, but we'll have to see. At the same time, let's take a look at the pound. I mentioned the pound a moment ago. Look at that pound dollar. Keep an eye on this one. I've pointed this one out several times. Look at the daily chart on the pound USD hitting support around 1.2550, let's call it. If price breaks that level, which I think it could with this data here today, that's a nice catalyst. Watch the price action. Let's see if we can break through that low. If that happens, perhaps there's a little bit more sell side coming. We'll have to see. Again, pound USD looking really weak here today. Let's see what else. Dollar yen is threatening it. It's really threatening it here, guys. We'll take a look at the daily chart. So daily chart, we have resistance that many traders are saying, well, Bank of Japan thinks they're going to intervene, or they're saying that they're going to intervene up in these areas. They have attempted to do that several times in the past, and to their credit, most times that we've come up to this level previously, the dollar yen has retreated from those levels. That being said, if this dollar strength bubbles over and the Bank of Japan cannot contain the currency exchange rate, what I mean by that, by the way, the Bank of Japan can buy their own bonds. They can do things to try and strengthen their own currency, just like the U.S. and any other major central bank can weaken or strengthen their currency to some degree. There is resources spent in order to do that, but it's possible, right? That being said, if this dollar strength bubbles over and we get some move like that, I actually think I'm a buyer of the dollar yen. So I'll keep an eye on it going forward. Have it on the edge finder as a bullish signal. We'll wait for that technical setup to line up, and then I might enter that trade. Again, guys, just a reminder, if you're seeing me use the Edge Finder, you're like, what is that tool? It is currently 45% off. It's our in-house built algorithmic software that helps traders look at more fundamental data faster than you ever have before. I'm very confident in that. Check this out. So the idea here is, let's say that you're someone looking at indices, right? I mentioned earlier, I should check out the NASDAQ because we're getting a bearish reading on the NASDAQ, which is a rare signal on the Edge Finder. So let's take a look at this. So this page, for my fundamental fans, if you're somebody trying to get into fundamental analysis, we built these data scanner pages. These data scanner pages allow you to look through a ton of market data in very quick succession, right? So you have jobs data, you have economic growth, GDP, manufacturing PMI, services PMI, retail sales. You can look at through all this data and see how it impacts our chart, the NASDAQ in this case, based on what the readings are. So again, if you are looking to get a copy of the Edge Finder, here's how you can do so. We're going to drop a link here in the chat. If you send us a direct message right now, you will lock in the biggest discount of the year. No cap, no lies, no jokes. This is genuinely the best discount of the entire year. We do it for the 2-year celebration this year of the Edge Finder's launch back in 2022. So pick up a copy. It's come a tremendously far way away. It's a one-time fee to get the Edge Finder, and you don't have to pay. You don't have to pay monthly. You don't have to do subscriptions. It's a one-time cost to get a copy. And on top of that, we're constantly improving it and adding new features. So if you've had the Edge Finder for 2 years now, you've seen this thing transform into a beast, and it's only going further. We are constantly working on it. We have a team of people behind the scenes to improve this software over and over. So if you don't have a copy, find out all the information just by shooting us a DM right here. Okay. So let's see where things are landing here following this this news. Again, you have the S&P 500 up just shy of 0.5% on the day. NASDAQ is up just about 0.5%. And meanwhile, the Russell not loving this news. This would make sense, right? This is a more interest rate sensitive area of the market. The Russell is small cap stocks, right? Small and mid cap stocks. They're not your ginormous Apples and Amazons of the world, right? So these companies are really threatened by interest rates staying higher. So again, today's jobs data, inflationary, right? If everybody's getting jobs, if inflation is a little higher, that could lead to the Fed not cutting rates. And so not cutting rates, not great for Russell. Same thing, by the way, for gold. But again, the exception here is that gold, I think, is also collecting a little premium in price due to the breakout news in terms of geopolitical conflict. Tool is very impressive. Thank you very much. Appreciate it. It is one of the coolest projects I think I've ever done in my life. Is working on the EDGEFINDER and bringing a software tool to life. My background is in software engineering, so to be able to use it in combination with my other great love, which is of course financial markets, has been one of the coolest things I've ever done. 1,200 people and only 25 likes. Can you guys do me a quick favor? If you're enjoying the show, hit the thumbs up button. If this is bringing any sort of value to your day, help us out, get us out to the YouTube algorithm. And also, I should mention this, there's 1,250 people here. If you are a regular, if you're always looking at financial markets and you'd like more of these, you're in luck. For all of the major news events from the US, right? All of the NFPs, CPIs, we live stream these events. And if you guys would like to come back and do these with me on a regular basis, but you can, we are very, very consistent in terms of showing up for live streams. So if you want to join us for future ones, I just want to invite you to subscribe to the YouTube channel right now and turn on notifications next to the subscribe button so you can see when we go live here, so you can come join into the action. I just wanted to mention that if you're new, welcome. Thank you for being here. It's very nice to meet you. And I hope that I can bring some sort of value to your trading. I am a content creator, but I'm also a trader. So, one thing I will kind of give you, I trade live money. I don't no nonsense. This is how I make money, but I also make money content creating. There's nothing wrong with doing both, but I just want to also point out, I'm not blowing smoke. I really trade the financial markets. I absolutely love this stuff. And if you're looking to improve your fundamental analysis as well as your trading, right? Make sure to tune in. We do this on a regular basis. So that's just my plug to the channel for you to come back and hang out with us again in the future. The Dow erased a lot of gains here in the last few days. This is a daily chart. In 4 days, look at this. In 4 days, we erased, let's see, going back all the way, 55 days, let's call it. I mean, we could even say it's like back to here, right? We erased a tremendous amount of gains in simply 4 days. This is the nature of stock indices. And I want to warn traders who are new to indices. I know a lot of traders who have gotten attracted to trading indices because they look like this recently. Who doesn't want to trade this chart? It just goes up and to the right. Wouldn't it be nice if markets just did that forever? But I've been trying to warn people with indices that don't get yourself in a huge amount of trouble. Indices do not go up forever. They don't just go up in a straight line, right? Look at this. If you had thought that, you would have gotten crushed in this move. And God forbid you would have thought that going into 2022. Like I didn't think that, but I knew markets could sell off. But even though I knew it, right? Even though I knew stock markets are not always pretty and fun like that. Look at what 2022 looked like. Just so you know, guys, if you think the stock market, if you're someone who's like, I just trade indices because they're so easy, they just go up. Look at this. Do you know how long you waited just to get back to break even if you were bullish right at the tail end of that last one? 752 days. Okay. And that's assuming your account didn't blow up. If you had any margin, if you had any sort of leverage, or if you had any individual stocks that were higher risk, your account got destroyed. Mine did not get destroyed. It recovered completely, but it's because I didn't have any margins, because I don't trade with margin. I don't trade with huge leverage. I trade with minimal leverage, minimal margin. I think conservative trading is what will keep you in this game long-term. Again, if you think that the market is just an easy, straight up and to the right chart, you had a 37% drawdown on the index, guys, not individual stocks. And this is assuming no leverage. If you leveraged your account, you probably blew it up, right? So 2022 was really tough. So please do not think that just because the market has been doing well recently does not mean that it has to keep doing the same trajectory. It could completely walk away and go to the downside, right? Yeah. So something to think about, right? Just remember that when you're talking indices, you have to be very careful with them. They can move very quickly, very aggressively to the downside. Let's jump back over to gold, see what's going on. Look at that. Gold, despite jobs numbers that should be not great for gold back up. Why is this? I'll tell you what, a lot of traders, when they see price go away that they think doesn't make sense, they use this word. This word is my pet peeve. You ready? M for, I'm not going to type the whole thing out, manipulation. People love to use that word. But here's the reality. If people just claim, oh, the market's manipulated, is it manipulated? Probably there are plenty of people who know things before the rest. But that's not the only thing. Like there's a valid reason why gold would stay elevated despite strong jobs numbers. If you just say, oh, well, it's manipulated, to me, that's just laziness. You don't actually understand how markets work, right? You're just saying manipulated because you don't know the reason. It's like a God of the gaps kind of thing, right? You don't know something, so you just assign a blanket statement to it. Here's the problem with saying, oh, the market's just manipulated. What you aren't considering is that we had massive news from NATO and Ukraine yesterday. The market is spooked out about what could be coming next in that political situation. Not to mention the Middle East, where things are not looking like there's a quick resolution anytime soon. Iran, Israel, they're really upset with each other, right? There's so much drama going on. And of course, jobs numbers coming in hot is not great for the gold market. But is it enough to dethrone the risk premium assigned to gold right now due to geopolitical risk? No, in my opinion. Gold will stay here. Now, it's not trading higher. It's not trading massively higher, but the geopolitical risk premium is still in there and, in my view, deserves to be. Does that make sense? Do me a quick favor. If that concept that I just pointed out, the geopolitical risk premium of gold, I know that's a lot of jargon and words, but if that made sense, can you guys just type yes in the chat for me? Just let me know. And also, while you're at it, if you could just do me a solid favor and hit the thumbs up button on the stream, help us get the like count up. That would be really helpful for the algorithm. We'd really appreciate it. But let me know if that made sense. Again, can it be frustrating if you're short gold? Yes, but remember, it's not just about the jobs data here today. I mentioned at the beginning of the stream, 3 things: Fed officials coming out more hawkish, jobs data, and geopolitical risk, right? There's multiple factors here. Now, again, there's also a good reason why gold is not up 3% on the day, right? Geopolitical risk, yes, it's elevated, but why is gold still slightly in the red today? Well, because jobs data, because Fed officials came out hawkish. So again, saying, oh, the market's manipulated is the weakest and laziest thing you could say if you are trying to become a financial markets expert or trader, right? If you want to be an investor, if you want to be a trader, I would urge you to never say as an excuse, oh, the market's manipulated. Is it is there some sort of like funny business that could totally go on? Yes, right? Do Congress people know stuff before the rest of us? Yes. Do they trade off it and make a ton of money? Yes. But that doesn't have anything to do with you, right? That doesn't have anything to do with me either, right? We as individuals, we can observe the fundamental real forces in the market and understand why markets are doing what they're doing. You know, yesterday, when everything was falling out of the skies due to the war concerns, you know, my editor, James, he made an excellent observation right off the bat. Because I was saying, what's going on? Here's the S&P 500 just shooting down, right? Here's the 5-minute chart. And I'm saying, what's going on? This is crazy, right? And I couldn't find anything. There was no economic data coming out. But then I found it. And before I could mention it to him, James says, well, check out Lockheed Martin. What does Lockheed Martin do? Does anybody know? Lockheed Martin, military stuff. So Lockheed, so the aerospace and defense. Lockheed Martin, at the same time that the market's falling out of the sky, is shooting straight up. And you know what else was? Oil was also shooting straight up. So again, this is where you understand it's not manipulation. It's that the market is smart as anything. It's wicked smart. And I'm not even from the north. I know a lot of northerners love to say wicked. I had cousins that would always say the word like it's wicked smart. I'm from the south, so we don't say that. But the point is, we just had this huge rip in oil and defense companies at the same time that the market was falling out. So to say that, oh, it's just manipulated. No, it was concerns about what's going on in, the NATO-Ukraine situation. And I don't know what happens there. I'm not a geopolitics expert by any means. I don't know what this means for Israel and Hamas. I don't know what's coming next with that. I also don't know what's coming next with Russia and Ukraine. Like, I'm not an expert on that, and I wouldn't claim to be. That being said, though, what I can observe from a market perspective, there's a risk premium there. People don't know, and with that unknowing, the market moves higher. Speaking of oil, I think we've got a nice push up here going on. I'm still long. I don't have a spot to trail a stop yet, but I'll continue to just monitor this position. TLT is going terribly for me. Look at this. TLT way back down. Makes sense based on the jobs data coming out really strong. The jobs data coming in strong. Of course, what does that mean? That means yields are going to jump because bond market investors, traders are going to say, oh, well, the inflation story is not going anywhere and the U.S. economy is strong. If we're gonna park money at bonds, we need more yield to account for the inflation risk that is going to be associated with a bond. Think about it. If you get a bond, right? Check this out. If you get a bond at 5%, you park your money for 5%. Let's just say it's not inflation protected. It's not a TIPS. If it's not an inflation protected bond and the market proceeds to have 4% inflation, which I know is a high estimate, but let's just say it has 4% inflation, you actually subtract that, you only get 1% in real return. So if the stock market or if the bond market sees strong economic data, which could lead to inflation going up, this number going up, right? Think about this. If this number is 4.5%, 5% is not going to give you anything. So the point is, if it goes up to 4.5%, the bond market says, give us 5.5. Otherwise, not interested, right? So that's my point, is you have to think that's how the bond market works. So strong economic data usually will shoot yields higher. And that is a creepy story to stocks because they're thinking, okay, rate cuts are not coming as soon. Are oil and gold correlated? No, not always. In fact, the correlation there usually increases, however, in times of concern about, the Middle East or things like that, because of course, in that case, people want oil and gold. But on a normal kind of flow of the commodities demand, they're not exactly correlated. In fact, think about like if the economy is doing really well, right? In fact, this is how we factored into our algorithm. So if you want to talk about like the intelligence component of the EDGEFINDER, this section, if you asked about correlation, check this out. Retail sales, services PMI, manufacturing PMI, GDP. If you don't know what all those things are, let me just keep it simple for you. This is like economic reads in the US. If you get strong economic reads, that's more bullish for gold, but it's not necessarily bullish it's more bullish for oil, but it's not necessarily bullish for gold. In fact, you can see, look at how these things are inverse from each other in the EDGEFINDER scoring. The 1 and -1, by the way, these are how the EDGEFINDER is scoring each component related to the asset in question. Okay, so this is how our algorithm works. So when we have GDP numbers come out strong, that's good for oil and poor for gold. Because remember, strong economy is not great for gold because that boosts confidence and security in the world, and gold typically trades on fear. That being said, oil manufacturing PMIs came out better than expected, not great for gold. Flip side, services PMI came out disappointing. That was good for gold, but bad for oil. Retail sales came out hot, good for oil, not good for gold. Does this make sense? This is how we score stuff, right? No one else on the internet does this. This is what we specialize in. We build like an underlying algorithm to what you see on the EDGEFINDER. The EDGEFINDER is not just a data source. It is also an interpretive source that helps to digest what all the data is actually telling us. Because I know a lot of people in here, they want to use fundamentals. They're interested in fundamentals, but they don't know how to actually systematically use them. That's where the EDGEFINDER, that's the whole purpose of the software. That's the same story. I couldn't just trade based solely on fundamentals off the top of my head. I need a systematic approach. And my background in programming led us to let's build an algorithm. And that's where we're at. So I just want to say also, the EDGEFINDER, as I mentioned earlier, I'll remind everyone, it is currently 45% off. This is the biggest discount of the entire year. If you've been thinking about getting a copy and you have questions, or you would just like to go ahead and get that discount before it ends, 45% off is now available. If you'd like some information about that, we're going to drop a link here in the chat right now where you can speak directly to a person on our staff about getting a copy. If you're serious about fundamentals, if you're lost in your trading and you don't know what you're doing, but you want to learn more about fundamentals, message in. We have a free course that comes with the software so that you can understand fundamentals. Again, take it to the next level. If you stuck around here with me for an hour or whatever, we're going just about an hour. If you stuck around with me and you're like, okay, fundamentals make sense. I'm not making this stuff up. As I mentioned all the time, I'm not blowing smoke. I show you my live positions all the time, real accounts, no nonsense. So if you're thinking about getting into this stuff, don't mess around anymore. Stop buying people's courses that don't show profitability. Don't waste your time with technical patterns that you haven't been able to backtest and produce profitable results with. Again, level yourself up this year. Stop wasting money. Consider purchasing a real product and a course like ours. Our course is free, by the way. The course is 100% free. You don't even have to buy the EDGEFINDER. If you want that course, it's on our website, a1trading.com. If you would like to get the EDGEFINDER, which is our process for approaching fundamentals, again, we'll drop the link here in the chat right now. Click this link, send a direct message. I'll show you what this looks like just so you're aware. When you click that link, you'll be connected to a representative on our staff. Click chat now. Click EDGEFINDER, 45% off, 2-year anniversary sale. Again, we're celebrating 2 years since we initially launched the product. Don't miss it. And you can go there. Why is the price a secret? It's not a secret, but currently it is 45% off. If you send us a DM, we'll give you all the information. The reason it's not a secret is because we work out pricing. Sometimes people need payment installments. So instead of me trying to spend a bunch of time explaining all of our pricing options, that's why I have staff, right? Staff can help you out with that. So Nick, can you explain how the risk on or risk off asset works in the EDGEFINDER? I could, Tanwir, but I'll need some time to do that. Basically, it looks at a bunch of assets, how they're performing, whether they're risk on or risk off assets. Like the VIX, for example, is a risk off asset. If it's going up, that's usually risk concern. The S&P is a risk on asset, right? And it calculates it all up. Frank actually built that algorithm. If you have questions about that, please feel free to contact us on our website, and we'll try and get you some information as soon as possible on that. With that said, guys, S&P 500 rolling over, NASDAQ slightly down here from where it was. The dollar index just really strong here this morning. Gold flat, silver down slightly, oil flat. Very, very interesting. I'm actually surprised. Well, I guess oil is rebounding off of its lows here slightly, but I'm actually surprised oil's not making a bit more of a move higher. We have geopolitical risk, but also the jobs data is strong. So if that pulls back, could be interesting to watch. Again, as I mentioned earlier, I'll stop out if price breaks structure lows, and we will go from there. Thank you guys very much for tuning in. That's going to wrap up the show. I got to get some content done. I'm leaving this evening. My wife and I are going to a wedding in New Orleans, which is going to be really fun. And I got to get some content out before I head out of the office. So thank you guys very much for tuning in. I hope this was helpful to you. Make sure to subscribe if you're new. Remember the EDGEFINDER 45% off sale. I know I keep saying it, but it is the best discount of the year. So if you're a regular fan, I want you to get that discount while it lasts. Thanks, guys. Have a great rest of your day. We'll see you next time.
It's our EDGEFINDER anniversary sale. If you want 40% off the EDGEFINDER, the absolute best deal of the year, don't wait and head on over to a1trading.com to chat with one of our representatives live right now. This is the biggest discount of the year, and we have so many new features to share with you, like our smart money indicator that directly compares COT data and retail data against each other, or our brand new data scanners with even more useful information and accurate scoring than ever before. Now is the perfect time to get this powerful trading tool because the 40% discount won't last forever. Celebrate the EDGEFINDER anniversary by grabbing yourself a copy today on our website, a1trading.com.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And before you go, make sure to take advantage of our massive discount on the EDGEFINDER for our 2nd year anniversary. Links are below. From all of us at A1 Trading, have a great day, and we'll see you next time.